traders, Gary Wagner here, just about 1:30 in Honolulu, 7:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands, May 18th, 2018, and this is the Daily Report for Gold and Silver, our weekend review, and what a week we have seen. Gold closed fractionally higher on the day, but lower on the week, closing at $12.9170. Silver lost about a penny at $16.46, and the dollar continues its dramatic rise, gaining about 22 points today, closing at 93.60. In essence, unchanged in terms of U.S. equities, Dow closing at $24,715. And although Bitcoin moved up fractionally, it did trade to a lower low and a lower high and continues tumbling to lower pricing. There is no doubt this week precious metals traders experienced quite a tumultuous set of events and hard selling pressure on Tuesday. Gold did close higher today, finishing up about $2.30, closing at $12.9170. The last 3 days have been muted, tepid at best, as the market reacts to Tuesday's dramatic sell-off. If you recall, on Tuesday, we had the market drop about $28, trading from approximately $13.15, breaking below 1,300, breaking below the 200-day moving average before settling at 1288. That low matches the 61% retracement. This, of course, was followed by 3 days in which the market opened and closed above this critical technical support level, and in my opinion, is attempting to form a base and find some level of support in this area. Before I get to next week's forecast, I do want to summarize the activity that we experienced this week in trading. And to do that, we really have to start at the beginning of May. May 2nd, it was these candles right in here when we actually issued a buy signal in the market. We entered the market at roughly 1307. That would be this green candle right in here. And we originally placed our stop below these lows at 1298. The market attempted to form a base staying above the critical 200-day moving average, and we maintained our stop up until Friday of last week at this low and relaxed level. If you recall from Monday's report, early Monday, we sent out a special trade alert recommending that we tighten that stop, and in essence, we looked at the price point of 13.1050. That is this area right here. And that was based upon the low of this particular candle. We placed it just under there. There were a couple of reasons that I had believed we could see some pretty harsh selling that was based upon some chart analysis I did over the weekend, because we saw a couple of things occur on Friday that to me were a little bit alarming. The first thing is that a simple candlestick pattern was identified, and that was a bearish Harami cross, the cross occurring in Friday's trading right here. And the second indication was that although the market had begun to move higher, the fact that it stalled just below the 50-day moving average caused me to have some concern. And that's why on Monday, we tightened our stop and tightened it to the low that was achieved on Thursday. Well, the rest was history, because on Tuesday we had a dramatic sell-off. It obviously knocked us out of the market at 13.1050. We reported a small profit in terms of the trade, $350 per contract. But the reason I was so pleased with such a small profit was that we avoided being in the mix when this market sold off dramatically. And in fact, for the remainder of the week, we have remained flat with no active trades, which brings us to our forecast and strategy for next week. The fundamental forces at play, which is a strong U.S. dollar and higher interest yields on notes and bonds, still continue to be prevalent within the market and could apply more downside pressure for safe haven assets such as gold. If that is the case, we would see gold pricing break below the current level of support, which I have pegged at 1288, and that is the 0.618% retracement. It is the retracement from this data set here, and the 50% retracement, which is a data set from July 2017 up until September 2017, and the 50% retracement area comes in at 1283, which happens to coincide exactly with the lows achieved this week. So we would see a hard break below there. If that is the case, my target would be 1267, and the best advice in terms of a trading strategy would be to initiate a short position with our goal of about 1265. Another possibility is that what we have witnessed over the last 3 trading days, by virtue that gold prices have stayed above the 50 and 0.618% support levels, is that it finds footing and then actually begins to track higher. If that is the case, we would have an extremely low risk trade in that we would place our stops below this level at 1283 and look for an upside spike, with our first target being 1307, which is the 200-day moving average. In either of these scenarios, I am extremely excited because I think next week is going to offer us a tremendous trading opportunity, whether we get a bounce from these lows and move higher, or break below critical support and move to the next trading level. Interesting action in silver this week also. Like gold, Tuesday's trading activity resulted in a dramatic drawdown, with silver losing approximately 2.25% and forcing it to break below the 50-day moving average. However, there is a key distinction. The 3 days following the sell-off in gold were small-bodied candles that were all relatively at the same closing price. Silver's action following the dramatic sell-off was a little bit different than gold in that it attempted to stage a recovery, as you can see by these 3 candlesticks, all green and trading to higher pricing. Therefore, my recommendation is that if we go long gold next week, we will also put out a recommendation to go long silver. And traders, it was an interesting week for those trading Bitcoin Cash as well as futures as this current sell-off continues. The market obviously stalled at 9,800 and over the last 2 trading weeks has been characterized by dramatically lower pricing. This week was no different, except for one critical factor, and that is at the beginning of the week, pricing actually broke below the 50-day moving average. Today was a muted day, closing up about $35, in essence creating a doji candle, but breaking below the 50% retracement. We remain bearish, and our current target remains at 77.65, the 0.618% retracement. Traders, the bulk of our technical studies section was devoted to next week's strategy, and I am extremely excited about the potential because we are at a critical crossroads in gold pricing, and a break one way or the other will mean a significant move either to the upside or to the downside, and that offers us tremendously eloquent timing, and that's what I plan to take advantage of next week. This has been Gary Wagner, wishing you as always good trading. We'll talk to you next week for another daily update and review. Bye-bye.